Hi, James. Just making a quick recording here, just taking you for a run through our AccuPro software, just to give you a quick idea of how it works. It's been built as an investment planning tool that can also be a report writer. Start off by entering the name of the person or couple or family trust that you're planning for, who reports it. As you can see, then you have the opportunity to add in salary information for a couple, for example. So here we can add in Joe Blogs, value of their home, value of their mortgage, personal details like their address, what their income is, expected growth in income, and allocation of the loss to, and that's of the properties that they're going to purchase, expenses and things like that. Not all of this is relevant in the current environment. We'll talk a bit more about that later. Same again for the partner. Right, as you can see there. Getting through into it, purpose, really this is just for report writing, add in a paragraph, which then when you create the report gets generated into. Important here though, the vision, what's your goal? So we're in 2021 now, so 15 years time, 2036. What's the gross income that the investor would like to earn? That's really the key objective of the tool, is to see if they can meet that requirement. There's lots of parts of the tool that has these bits built in. These are really these are not part of the minimal, our minimal viable product. These would be add-ons later in terms of, some of the more information around, different aspects of their management, and we're getting to quite a lot of detail. We really just want to start off with a cheap and cheerful tool that enables somebody to put in their own income, put in some properties, and you'll see here, these are an important part with the existing properties. A person's got an investment property. I've called it First Avenue. It's worth $850,000. It's got a deposit, so it works out the mortgage for you. Finance at 3.5% interest only. How much they're getting in rent, paying in expenses. Depreciation, not really an issue anymore, so it probably could be left out. What's the expected annual capital gain rate and target yields? And that's loan payments if you wanted to, you build in there where you might make lump sum payments, for example. But that's existing, someone who came to you and had an existing property but wanted to see what might happen in the future. So you plan properties. So we're dropping, a second property here in 2021 and a third property in 2025. The people earning $250,000 a year. Perhaps with the growth of properties, they'll be able to get some equity to be able to pay for deposits, be able to afford to do that. Again, each of these properties, same information as previously, what the property's worth, how much we're paying a deposit, what's the finance is going to cost, what's the income and rent, the agent's fees, which is, we've got a property management business as well, so that's important, we include that, and then other expenses, and so forth. Then we get down to the crux, which is really the important part of it. So the key, and I'm just going to jump straight past existing properties and planned properties in terms of what we are really looking for in terms of outcomes. And really, this is the key. We're here for our complete portfolio, where we are able to show that by 2036, which is the red line up straight up and down, is the target date, and our income, this is the net income, is the red line target, and showing there in this case that the couple in this case would be able to hit their target. And then behind that, there's this these calculations. We just jump down through. There's also, there's this cash flow analysis which works out rentals. So the growth in the rental in line with the assumptions that we've set, accounting fees, all of those expenses to work out the interest based on the interest rate we've put in there, and getting down to working out what the net profit is, and allocating that between This part of at the bottom was really important when there used to be depreciation, because that's where you got your negative gearing and that type of thing. Not so important now, so not really, again, a high priority. Those are two of the key. We'd really like to see the ability to be able to create this information in behind. Probably this income, this expenses, we could just set some assumptions in behind it as percentages, rather than have to have the person go in and enter them, because that's a bit slow. So really the expenses could probably come out of an early version, and really looking just to focus in on these planned properties, what they're worth, what's the interest rate. So the key variables here being the purchase price, the deposit, the interest rate, and then the rent that'll be earned, increase in annual rental. These sorts of increase ones are quite important. Your annual capital gain rate. I would note that all of the figures in here, so you see, you'll probably be surprised if I show you the equity to debt and show the graph, that the equity, even though these interest-only loans, you see the equity line decreasing, and that's because it's all done in real dollars, so that we essentially over time the value of your debt in real terms decreases. So we don't try and make people think, well, how much will I need in 15 years' time to have the same spending power as today? Everything's sort of worked out in terms of gains, less CPI, so you take the CPI out of it. That's probably, really just a brief discussion. Really the key thing being that we, obviously a portal where somebody can come in and we can have personal information from them. They can throw in some data in terms of properties they've got now and properties they might look at in the future, and come up with where will that get me in the future? Much like you get with, say, a KiwiSaver calculator, say the ASB, I know has got one like that, or other tools like that. And perhaps you can throw in sliders to be able to change and see what happens if I change the rate of growth in terms of property values, or the interest rates, those type of things, so people can get a feel for how sensitive changes in income and growth are to those sorts of factors. So that's probably just a pretty brief summary to give you an idea of what Iskin and I was looking for.